Good afternoon, traders. Chris Buss here with Traders Profit Compass with your Market on Close report for Tuesday, December 8th. Okay, let's dive right into it. SPY 2 hour. We shook off some early morning weakness and just kind of grinded higher throughout the day. You can see we're still inside this rising wedge that I've got here, up towards the upper end. We still have the, although I don't have the line in the right place, we still got bearish divergences in place. But, you know, as we have said many times, bearish divergences are a yellow flag, nothing more. We've talked about sentiment at being, at extremes, extreme bullish sentiment. Again, that's not a sell signal. If you were keying off of bearish divergences, you'd have sat out this whole run, because the whole time we were on bearish divergences. So keep that in mind. It is a red flag, or excuse me, it is a yellow flag. It is, it's always in the back of your head that a trend change could be right around the corner, along with the extreme bullish sentiment. That is a worry. And how I'm addressing that in my own trading is, whenever I get embedded gains on a particular position, I'm rolling up. I might be buying more time, or I might not. But I'm harvesting. I call it roll and protect. Roll and protect. Roll to a higher strike. Take that money off the table. Keep your exposure the same. So that's how I'm, trying to address it, so that my overall exposure is relatively the same, but I'm, as particular issues, names that I'm in are grinding higher, I keep taking those profits to the bank and do not leave them out there for, what will eventually be a giant red bar to take them all away. So moving on to the SPY 30-minute. Here again, we have a rising wedge. There was a great opportunity this morning on this pull-in to trendline support and lateral support here at 368. That was an awesome place to try an objective long if you were out or looking to add or active trader, whatever. That was a great entry location, because you had double support. You had the trend line and you had lateral support as well. So that was a very objective place to try along. Now, I had carried over a 369 put as a hedge, and once we made this bounce here, I covered that. I lost a little bit, but be that as it may, at this point on that bounce, I knew I was wrong, and quickly got out of that, and then was back on the right side of the trade. So anyhow, when you are doing your pre-work, we had this line identified at 368, and we had our rising wedge in place. So in your pre-work, you could have been saying, if we get a pull in there and it holds, then I can get long. Now, a secondary option would have been, we started red, and then when you recaptured the open here at 369, you could have bought that as well, and then you were golden the rest of the day. No real shakeout candles or anything like that. the Qs. Here again, we had a down open and tested this 305.50 area. I actually had bought some puts as hedges, quickly discovered I was wrong and got out of those, and then price worked higher the rest of the day. Here was that location. You can see the wick that went below. I sold that, which was wrong, but on the recapture, then I knew I was wrong at that point. You know, here I was thinking, oh man, is this thing going to break down? You know, I've got positions open. I want some protection. So I put it on. It lasted, 30 minutes, and then I was out of it. And you can look at that one of two ways. You know, what a dummy, you should have known not to do that. Or, discretion is the better part of valor. You get a follow-up bar to that, and then all of a sudden you look like a hero. So you've got to take your shots. Just don't stay with it, the rest of the day, staying short. Once you reclaim that area, you lost some on your puts, but cover it. Make it be a paper cut, not a mortal wound. But anyways, we're working up into a narrower wedge here. And, now going forward, I would be drawing in some support levels, just above 307. You don't want to come down. Now here we had a break of that wedge, and it was saved by this support level. You're going to want to have those levels identified up here, just as they were down here, because, a break of this wedge, you're going to be open back down to 305.50 again. IWM, this has been a great trade. Strong day. I mean, opened on the weak side, but then bounced right back and then up the rest of the day. You can see it here on the 30-minute chart. I mean, if you were looking for a long in IWM and you got this rug pull down to 187, which we had pre-identified on the chart, great place to, try a long. Your second opportunity was reclaiming 188. That was, a perfectly reasonable second entry there, and then you had a great follow through the rest of the day. I still like IWM long. I've dropped in another little shelf of support here at 190. If you're long, and we break 190 tomorrow, to the downside, you may want to cover that long and, book your profit from down here, or just kind of see, does that hold and then reaccelerate. But IWM has been really strong, and I like it to go higher. Facebook, just never got it going today. I'm long, been frustrated in the trade. We had igniting candles over here. They pulled it back in. More igniting candles. They faded it all the way back to 280. More igniting candles, and then more fading. So this really hasn't panned out, and that's trading. I may have to get out of my long. I am in 290s for December expiration, and I don't have a lot of time to waste hoping for this to come back. I may have to just take a loss on this particular trade if it doesn't do something. It's got to recapture 284. It had it momentarily today, but just couldn't hold it. I got to get up above 284 and make a push for that position to pay. Apple had a much better day today. There was a nice pre-market candle high and they faded that off the open, but it came in here and held this 123.25, and then made a new high during the day, and then they had a little fade bar at the end, which was, I guess that's what they do. But it's holding the trend line, holding this trend line. I'm still long and looking for this 125 to be taken out, and then I think that'll really open the door for a run towards 128, 130. So I'm hoping that happens quickly. Tesla, this was a beautiful, beautiful setup today. We had a down open with several candles testing this 620. And in the trading room, I said, you can be long against 620. And that really panned out for a nice recovery trade, up towards 650. That was good for $30. That was a great intraday trade. And the thing that made it all possible, the thing that really set it up, was having this 625, 620 level identified and having it hold already 2 times in early morning trade, to where you knew that was a real level. You knew the line that you were shooting against, and then just stay long against it, and then you got the reversal and the follow through higher. So that was a great trade. Microsoft had an interesting day. It had been battling in this 214 area for several days, not really doing anything, and there were some significant institutional orders in the January 230 calls. So they're looking for a big move in the weeks ahead up towards 230. That's way out of the money, but when those calls hit, Microsoft really woke up and moved from 214 up to this key level, 216.50, 217, right in there, and hit that wall again. So for tomorrow and heading forward, I've got a key resistance zone here at 217.50. If you didn't get in down here, I would hold off until this clears. You could get in at 216.5 and maybe try to make $1 out of it. But I think the bigger move is going to come once this 217.50 is cleared. Then you got a clear shot to 221.50. And then if those institutional players are correct, get a breakout and a move back up towards the highs at 227, 230, in that area. Amazon was doing nothing, made a low, and then put in a hammer candle in reversal. I didn't take the trade, but you could have bought on that reversal candle against the low, or on the reclaim of 31.50, and that was good for $30. So it doesn't look like much there, but that was a really nice power move after 31.50 was cleared. Now for tomorrow, you're going to be in no man's land. I think you got to wait for 3,200 or a back test of 31.50 before you can do anything. Right here in the middle, that's a tough trade to take. So wait till you're at a boundary and a clear line to shoot against, either on the long or the short side. Google had a full back test down here to 17.95. If you were interested in that trade, that was a beautiful place to get long. On the pullback to the prior trading range, right here at 17.95, where it broke out and held before, that was a great chance to get long. And good for $20-25 there on the recovery. Now going forward, I think the key is recapturing 1820. I think you can be a buyer there and look for 1835, 1840. I still think this is going to find its way to 1875, which is the measured move coming out of this box. It didn't really do what I thought it was going to do, which was bull flag here and then break out. It got soft all of a sudden and pulled back, but still, if the market stays constructive, I think this is going to find its way higher, and the first hurdle is 1820, and if you're interested in that stock, that would be a buy point. Netflix, nice pull in to 505. You had 3 bars. Look at the 3 reach back candles into 505, which is a well-defined area. You could have gotten long against 505, and then you got a push. Now, it wasn't a tremendous amount of money. $750 on a $500 stock is not, crazy, but it's a good positive trade. And you never know where it's going to end up. All you know is your entry point. And we called this out in the trading room that you could be long against 505. And, now that you've got a good entry point, good trade location, if you held your position overnight, you're looking for follow through. So getting that good objective trade location is such a key. And that way, if you get that trade location, you're not apt to be shaken out of your position. Once you're green and moving higher, you can take a red candle and not get shaken out. So that was a good entry point. Papa John's. This is a trade we put on today. If you're part of our group, had this saucer bottom and now emerging with this breakout. I got long January 85 calls, and I'm looking for follow through up into the low 90s. I really like the setup. RSI building, momentum building. I like that. I like that trade. Couple new names I want to bring to your attention. BIDU on the weekly. Coming up here to a key spot around 147.50. I would set an alarm there. I like this trade to go higher on a breakout above 147.50. Looking for a move up towards 170, towards this larger volume over price bar, and then if it can clear that level up towards 200. So I've got an alarm set at 147.50, and I like that long. I would look out into January or February. Give this thing time to work. Remember, we're on the weekly time frame, so give it time to work. Look out, 6 or 8 weeks, and anchor your position. Notice also that price is above all the moving averages. So now all these averages are turning up, and those should act as support on the, on any kind of pullback. Another name is Cirrus Logic. There's been some reports out there that Cirrus has captured more content in the iPhones. Now this company gets like 85% of, they're like a captive vendor to Apple. I think 85% of their revenues come from Apple. So in that respect, it's not great, not a lot of diversity there. But if they are in fact capturing content share within, the iPhone universe, this may very well break out here. I've got an alarm set at 86, at the prior high. I like this long if it can break out, and then look for higher ground up towards 100 and maybe even 120 over time. Not going to go there in a straight line, but I like it long above 86 on the breakout. And remember, that's weekly closing basis, so look for your closes on Friday to seal the deal on a breakout. So I like those, and I think you should put it on your watch list. Okay, that wraps up the market on close. I still think we go higher, with the caveats that we know we're extended, we know bullish sentiment is crazy, we know we have bearish divergences, but we're at a very positive time as far as seasonality. December's a strong month. We're coming out of a strong month. I think retail is pushing this thing higher. I am optimistic that we will get some kind of a COVID relief deal before Christmas. I think that can only be a positive, regardless of whether it's super big or not so big. I think just getting that bill in place to bridge the gap to the inauguration, where Biden can do whatever he wants to do. I think getting us through the next 2 or 3 months will be a relief for the market. So I think that'll be a positive. And also, we've got to fund the government. I think the government runs out of money on Friday, I believe, the 11th. And from what I understand, they're going to try and pass a 1 week Band-Aid extension to buy another week's worth of time to get the COVID package and the governmental funding package tied together, all wrapped up in a bow, so the legislators can say we did our job. Then they all go off for Christmas break, and then that'll be it. And I think that'll be a net positive for the market. But opinions aside, we've got all our levels to lean on. Keep ratcheting up your stops, keep ratcheting up your strikes, take nothing for granted. Don't get crazy on exposure. I know the FOMO is raging out there, and that's understandable. Things are working, but you can't put yourself out there, with extreme exposure, given where we're at in sentiment, and we're buying at the top. Let's face it, we're at all-time highs, and probably not the place you want to go in, max leverage, max long with everything you got, because all it takes is one bad day, and you've lost a lot of those gains, hard-fought gains from November and early December. So keep your head about you, stay focused, keep your eye on the levels, respect your stops, and I think everything is going to work out fine. If you're new to the channel and like what you've heard, please hit the subscribe button and the alarm bell. You'll get all my new content as it's produced. Over in the show notes are links to both the blog site, where you'll find a lot of interesting articles and information for aspiring traders, and also a place to register for all my content. As it's produced, you'll get an email in the mailbox. And for you new listeners, I am in the early stages of making a headquarters move from Michigan down to Florida, and that's going to kick off in earnest next week. So there's no way around it. I am going to go dark for several days, maybe even a week, as I get down there, get my facilities, get everything put together, get my internet service and all that kind of stuff. And what I've been doing is peeling off my short duration trades, stuff that's expiring next week, regardless of whether I think it's going higher or not, and moving those positions, the ones I want to keep, out into January, so I don't have to, be in front of the computer every minute of every day watching this stuff, so I can take a more of a long-term duration approach with my daily stops. And, if something gets tripped along the way, I can close it out at a more, leisurely, organized way than, having all this short duration stuff where time really matters, and, the intraday movements really matter. So I'll be dialing back any, intraday trading stuff that I might want to do, just for the fact that I've got other things are moving to the forefront that I've got to take care of, get moved down there, then I can settle in and get back to normal. So I really appreciate your patience with that, and all you guys that have been with me for quite a while. I really appreciate your patience during this time when I'm making this move. So anyways, this has been Chris Buss with Traders Profit Compass. Talk to you next time.